All right, guys, welcome, and you guys are welcome to start this call today. It's gonna be amazing. We have Eric. Go, Shane.
You ready to go ahead and kick it off? We normally have about 50 or 60 people on here. I didn't know how much more time we were going to give people to jump on.
We still have people coming in. They're missing the beginning, so we're good to go.
So it pays to be on time, right? No tardiness allowed. All right.
Well, we'll drop all the gems right now.
Right.
Well, pretty cool, man. I'll go ahead and give my brief introduction of Eric here. Gosh, where to start? But I mean, I will say that, well, first of all, thank you, Sergio and Jonathan and Tony, to giving Ryan and I an opportunity to co-host tonight. Certainly appreciate that a whole lot. I guess I'll open with a few words just to be brief. Just a moment or two will allow Eric to, ask Eric to introduce himself. And of course, I'm reading. I want to take my notes here, make sure I cover a few things. Certainly wanted to thank the people that I personally invited tonight to the call, and of course, all the regulars that are here now. As we mentioned earlier, this is always an open forum, so you're welcome to ask questions throughout this entire thing. I have prepared a few questions for Eric, but everyone's, and interject your questions at any time. Eric is well versed in the multifamily space and is used to answering student questions. So awesome. For Eric's benefit, I just wanted to take a moment to let him know who the audience kind of is, right? You have, if I had to throw a number at it or percentage, it's probably a third of multifamily mindset students. You got some Brad Sumrock students in here. You got some Grant Cardone students in here. And then of course, just, people that are here interested in learning about the business. But let me go ahead and give you guys a few words about Eric. So Eric Chatterton is one of the co-founders of managing partners of Gibby's Capital Investments, which is a real estate investment firm headquarters out of Houston, Texas. He spent over a decade in direct sales and management before transitioning full-time into multifamily real estate. In the last 2 years, he's gone from 0 to 1,328 doors as a GP, owning just over $153 million worth of multifamily real estate. As a head of investor relations, Eric provides investors with strategic opportunities to diversify their portfolio with multifamily properties. And as I mentioned earlier, he frequently shares his experience and knowledge with other multifamily operators and students looking to enter the multifamily investment space by participating in multifamily education program. I'm sorry, the multifamily mindset education program and 3-day training workshop. He's been a guest speaker on several nationally syndicated podcasts and has had articles written about him in Yahoo Finance and the New York Weekly. In addition to that, he's invited to speak at several multifamily conferences nationwide. And so with that being said, we'll ask Eric here to say hi and give himself a brief introduction. Then we will begin asking questions. But I'll let you guys on a little secret here. So Eric changed his plans tonight from a date night with his wife to be here with us all. And so if you guys could give a warm welcome,
let's give him a hand.
Eric, for being here and dedicate a little bit of time to us. It's certainly much appreciated.
Yeah, let's go. Let's put some hand claps in the chat, guys. Let's show them some love, man. Not everybody does that, so we really do appreciate it, Eric.
Absolutely. No problem at all, guys.
So thank you. And Eric, with that, man, by all means, please tell us a little bit about your background, what you got you involved into real estate. And like I said, we're going to have several questions for you, but you're welcome to, and we're going to rotate the panel of asking questions, but please go ahead and give us a little bit about your background and tell us what got you into multifamily real estate.
Sure. Let's jump in, guys. Let's have some fun. So, you want me to give some sort of background. I honestly don't know if I could ever give myself a better intro than what you just gave. So I appreciate the kind words, Shane. That's awesome. It's been a humbling and exciting first couple years in this space. And, part of the reason why I do this, and, I love just seeing other people take this step and jump into this and learn and grow and start picking up traction. It brings me a lot of fulfillment. So, hopefully those of you guys that are listening that might be newer, hopefully I can give you guys some, value that might be able to help you take some strides in your businesses. And that's really what I look to see and gain from these things. So, but yeah, kind of like Shay said, I'm excited to be here and interact with you guys. I want it to be a very open forum as well. So the more questions you have, the you know, the more I can get to know you guys, you know, on a personal level, the more that I'll have fun. But yeah, I kind of got into this space. I actually initially found multifamily back in 2017. And I'm not sure if some of you guys are in the same boat, but I found this, and then I started making up a bunch of excuses for about 3 years. And I told myself I was too busy. I told myself, you know, I didn't have enough time. And so I didn't move forward. I bought like this online program, didn't do anything with it. You know, listened to the excuses in my head. And then in December 2020 is when I finally jumped in. And, you know, seeing what I've done from December 2020 to now, just over 2 years, you know, it makes you wonder like, man, what if I would have done it in 2017? What if I had 3 more years, you know? And so, but regardless, I'm grateful to be here. And I kind of got into this space because I wanted to show my parents that there was a better way to do real estate. You know, my parents, I kind of grew up in and around it, in both single family and multifamily. But my parents were self-managing 12 to 15 single family homes, and then also, you know, 2 small multifamily buildings. So they were self-managing everything, guys, like everything. And they're in their 60s. And so, like, you got to imagine from my perspective, you know, these guys are waking up, my parents, 5, 6 in the morning, going to the apartments every single day, you know, till 9, then going to their 9 to 5s and going back to the apartments every day till 8 or 9 p.m. And, you know, like no shade their way. Like they saw a ton of success, a ton, and, you know, gave me a really good upbringing, and I'm very grateful for that. But I couldn't help but think there was a better way to do it. And I saw them working 12 to 15-hour days in their 60s, and it just, you know, it broke my heart. Like, I wanted to show them that there was a more passive way. So, you know, really cool full circle moment. You know, I got them to sell all their assets in Oregon. They've redeployed all their funds into my deals. Now they're making $250,000 a year from the passive income, the passive cash flow, not to mention any of the equity upon exit as well from the upside. So was able to kind of help retire my parents. You know, it's been a fun journey for me, man. Like, you know, where I was a little over 2 years ago to where I am today, it's just a completely different person, completely different scenario. You know, used to be in a bunch of debt, was able to get out of debt, was able to marry the woman of my dreams, and we just got married a few months ago. So life has really changed, and, you know, I'm happy for you guys to get to know me more. So I can kind of point you in whatever direction might be best suited for you guys. But, you know, I've been able to accomplish a lot in a quick period of time, but, you know, I can't sit here and take all the credit, man. I really can't. I've had a phenomenal team behind me, and I partnered up with some phenomenal people. And, you know, to me, I think that's the name of the game, especially when you're starting out, is, you know, do more together. You know, there's enough good to go around on these deals, and the way that we're taught on these deals. And like, I just like working with good people, you know. So if you're a good person, you got good morals, good values, good work ethic, coachable, then, you know, you're the type of person that I'd want to potentially do some business with. So, yeah, that's just a little bit about me. You see here on the screen, it says, you know, takeaways from, you know, how to get to 368 units in the first year. That was my first year. That was a great first year. And, you know, we took it to a new level in year 2, and, you know, we're going to take it to a new level in year 3. And so, you know, I'm excited to kind of just share my insights on what's happening in the market, where I see things going, where I see Gibby's Capital going, and, you know, just, you know, whatever value I can add to you guys on this call is what I'm really looking for. So I'll kind of, you know, feel free to open it up, guys, ask whatever questions you want. But yeah, we went from 1368 at the end of the first year to now at 1328, or sorry, 368 to 1328 doors. So it's been a fun ride, and I've learned a lot in the last 12 months. I've learned a lot the 12 months before that, and I'm sure I'll learn even more this year. So hopefully I can learn from some of you guys too.
Man, that's amazing. That's amazing, Eric. Once again, man, thank you so much for being here. Like, as Shane said, guys, if you haven't met Eric in person, or his wife, they're such an amazing people. Eric, your story actually really inspired me when I first heard you talk in Dallas, when we had the 3-day event in Dallas, and to talk about the debt that you were in, and how you just, you know, you wanted to give your who's your wife now that life she deserves. You know, we all want that one day. And obviously I want you to, can you explain that process of, you know, because not everything is all pretty nice and roses and blue skies. You know, you were obviously in somewhat of a pinch, and as many of us, you know, we're somewhat in a situation to where, like, you know what, let's change our lives. Let's start investing in the multifamily. You know, you're proving that this is the way to go, based on, you know, the situation you're in. Now, we all, you know, everybody's going through something. Everybody's kind of going through battling their own battles internally, personally. But can you explain a little more before we get into the multifamily, you know, how you acquired them and the process? Can you explain how you were just able to cross that bridge and just say, you know what, I can do this. I can do this. You know, forget about waiting or procrastinating this 3 years. You know, what broke that the straw off the camel's back, and you said, you know what, I'm all in, let's go. Because a lot of us are in that situation right now, man. And maybe you can inspire us to really just say, you know what, let's go.
Yeah. Yeah, man. I hope so. I hope so too, because, you know, I definitely think I'm biased for sure, but this space has changed my life night and day. So I'm very passionate about it. And, you know, those of you that have seen me at one of the 3-day events live, like, you know, I believe in this stuff full-heartedly, you know, purely because I've seen what it's done for me in my life, and not just me in my life, but also my passive investors in my deals. But, you know, like you said, Sergio, everyone's got their own battles they're facing, right? And, you know, there's a lot of situations that are happening in every person's life. And I think, like, for me, the biggest takeaway that I could tell you was, you know, there was a period of time for a few years there where I was waking up with no purpose, with no passion, with no fire. Like, nothing was really getting me out of bed. I had no spark, no pep in my step. And I think, like, if any of you guys are waking up like that, you know, you guys have already made the right choice by being here, right? By starting to pursue multifamily. But that was when I knew I needed to make a change. You know, that is a clear red flag that you're going down the wrong path if you're waking up every day not excited about what you're doing. And so, you know, part of the reason why I jumped in, I knew I had to do something drastic. I knew I had to make a huge decision. So, you know, I spent a bunch of money on a education program. I spent a bunch of money on coaching and mentoring. And I encourage those of you that haven't, if you haven't, find a program and jump in, because, you know, I think sometimes you pay for speed of execution. You pay to get a seat at the table. You pay to surround yourself with people that are actively doing this business and doing it at a high level, and it'll propel you in the right direction a lot quicker. So that's what I did. I was willing to take that step for me. And I think a lot of you guys on this call have done something similar. So if you've invested into yourself for education and training, like, you're on the right path. But for me, it was just, I realized if I didn't do something different, then, you know, I'd be doing the same stuff next year that I was last year. And I didn't want to be doing that. And so, you know, it was a big decision. It was something new. And I'm not sure how many of you guys have previous real estate experience, but I had zero, not one lick of it, not one lick, man. So a lot of it was new to me, and it was intimidating. But at the end of the day, you got to ask yourself, like, are you willing to bet on you? Right? Like, are you willing to bet on you? And just think about that, you know, because sometimes, you know, you put your faith in other people, but at the end of the day, it's up to you to succeed. You know, it's up to you to provide for your family. It's up to you to provide for your spouse, or heck, even feed your dog. So whatever it takes, like, it's on you. So really, it's just like, figure out the best plan of attack, figure out the best steps, and go attack it, man. Like, give it everything you got. Like, for me, I spent 40 grand on education, so I wasn't going to let that go to waste. You know, put myself back into a huge hole. I put myself back into a ton of debt to be able to fund that education. And so, you know, if I was going to be taking that risk on myself, then I was going to make sure I backed it up this time, and I backed it up big. And that's what I did. And I'm still learning, man. I appreciate all the kind words, but I'm still getting better each and every year and each and every day. And I've learned a lot. But man, I think it's just a matter of, like, it's not a matter of, like, what you think you can do now, but what do you see yourself doing in a year, in 3 years, in 5 years? And if you think that you're capable of more, then start reverse engineering that path and figure out what it takes to get to that higher level. Figure out who's doing it ahead of you and figure out what exactly they did, you know? So hopefully I can give you guys some of my path that I took, and, you know, save you from some of the hurdles I had to jump. Like I said, I'm an open book. I'll give you the good, bad, ugly. I'm extremely transparent. And hopefully if I give you some of the ugly, it can save you from not doing the ugly. So yeah, whatever questions you guys get.
I'm glad you said that, Eric, because I think a lot of us are in the same boat where we spent a lot of our savings. Like a lot of us got in debt to these mentorships to learn, to, we believed in it so much where we, maybe the 40,000 was everything we had. That's the last thing that we had to our name, and we went all in, right? So just guys, just as Eric is saying this, guys, like we're not all alone. And I said this last week, but a lot of people are afraid. A lot of people are really scared because, this is all they had, and they invested into a mentorship. And as you can see, Eric did the same thing. He said he dug himself in another hole with the 40,000, but in this case, it was obviously good depth, correct? And he gambled. You got to gamble on yourself sometimes, but man, that's amazing, bro. I love your story so much. It's just amazing, and it gives me hope. It gives me hope, which is, I'm sure it gives a lot of other people hope, where we hope to be in your position in another year or so, man. So I really appreciate that. I don't know, Tony, if you got something for Eric.
I think if I could touch really quick, guys.
Go ahead,
like,
brother. Go ahead. This is your stage.
Yeah, a lot of people focus at the very beginning, and I talk to a lot of new people, and they're trying to do everything A to Z. They're trying to do acquisitions, underwriting, raising the capital, asset management, due diligence. Like, they're trying to do the whole thing. And because of that, they're wanting to keep a big piece of the pie. Well, I tell you what, like, I feel like part of the reason what propelled me faster was that I was willing to take a haircut on some of my percentages and partner up with people that were better than me and take smaller percentages so I could have the opportunity to learn from better people. I've ranged anywhere from 5 to 60% GP on deals. And, now that we can sponsor our own deals, we can keep the entire piece, which is great. But it wasn't like that for the first 2 years and 2 months, so you look at 26 months straight where every single deal I've done, I have partnered with other people every single time. And so it's not just me, but because I was willing to do that, because I was willing to take haircuts on these deals and these percentages, it allowed me the opportunity to learn from people that were much better than me, but also at the same time, guys, build credibility with not just, amongst your peers, but with lenders, brokers, investors, all of them.
That's good.
Hey, yeah. Hey, Eric, how you doing?
Hey, Tony.
I'm Sergio and Jonathan's and Shane partners,
Very
and
cool.
I really appreciate that you're here sharing your knowledge and your experience in real estate. And I wanted to add to that. It's really amazing how you said that it's really important to share the pie. I have a couple of friends that they want to do real estate on their own, and they're not able to grow. And I'm telling them, listen, it's like, of course you gotta find the right people, right? So it's not easy to find the right people, but they're not even willing to look for the right people. So I'm trying to change their mind, because they're so smart. I know they can grow so big, but they're not open-minded. So I'm trying to help that kind of people. And also we're doing this kind of Zooms, so we can meet those future partners that we can do business with, because
Yeah.
you said it's not easy. It's not easy to find the right people, but we can find them. Yeah, like I met Jonathan at an event. He used to be from Chicago. I met Sergio. He's from Dallas. I'm in New York, and people are like, how did you guys meet?" At an event? We're not from the same city or state, even the state. It's crazy. So it's just a matter of time of finding the right partner, and being open-minded and willing to share the pie. So I really agree with that.
Guys, I think one big thing too is this is not an easy business, right? I think those of you that have been in it that haven't done a deal yet, that. Even those of you that have done a deal yet, that. It is still difficult for me, and we're working on our 9th deal. And so Like it is still difficult for me. And so I think the big thing is, I'm not sure if you guys have y'all ever seen that meme? And there's like this guy, there's two guys underground and they're fighting they're digging for gold, right? And one guy, he gets like right here and then turns around. He's like so close to the gold. And then this other guy, he makes it and he gets the gold. You guys seen that meme before? Yeah. So
Yeah.
I'm telling you, like, that is exactly how I felt. I kid you not. The amount of times and I'm not a quitter of anything. I've never quit a thing in my life, but I was tested, man. Like it took me 7 months to get my very first deal. I was tested 3 or 4 separate times. I remember thinking, man, I don't know if I can do this. I don't know if I can do this. And that was honestly a shitty feeling, but you keep fighting. You just keep getting back up. You remember your why. You remember what gets you out of bed. You remember what your end goal is for 3 years, 5 years, 10 years, and let that fuel you, because I kid you not, like I kept getting up and then one day it just happened. The first deal came. And then, which was my first deal was a 224 unit building in Fort Worth, Texas. We closed on that deal. And, they say the law of the first deal. So if you guys can be just tough enough to get from, where you are right now till your first deal, I promise you, things get easier and easier each time. And, after I closed on the first deal, 10 days later, we got an LOI accepted on our next deal, 10 days. So they talk about law of the first deal. For me, it was very, very real. So just hopefully that gave you guys some sort of, little inspiration to keep moving, keep pushing forwards, because I was literally, if you guys are thinking of that same thought, I was there. I literally was there. I remember thinking it. So.
Yeah, I can share something like that. When I first started in my fix and flips, the first 3 months I couldn't find any deals, and I wanted to quit. I was like ready to quit, but I was like, I don't know, something told me that like to keep looking for a property, and I finally found it after 3 months looking for a deal to flip. But that was like, 2 years and a half ago. But now it's like, now I learn how it is. It's like when it's hard, you just gotta keep pushing. So we have I wanted to tell you, we have a couple of questions on the chat. So I wanted to,
yeah, let's jump in.
I have from Davide, where do you see the market going?
Yeah, man, that's the golden question right now, huh? Where do you see it going? Here's the, I think there's 2 types of operators right now. There's operators that are taking a back seat, sitting on the sidelines a little bit, rightfully so. There's a lot of uncertainty going on in the market. And then there's other people that are doubling down. And, I'm kind of more in the position of the doubling downside, but also doing it smart, making sure you're vetting properties properly, making sure you have good teams put together on each and every one of these deals. But also now more than ever, having a network of people is going to be most important. And the reason why is because you look at like our debt terms, for example, right? What's happened to interest rates in the last year? They've gone up quite a bit, right? And so what this is doing is it's making our debt terms a little bit harder. We're getting lower LTVs on these deals. And so what this means, we're having to raise more capital to close on good opportunities. But if you have access to capital or access to people that have capital, then you're going to be able to capitalize on some very, very good opportunities coming up in the next 6 to 12 months. I think there's going to be a lot of opportunity popping up. And I think the more prepared you are and the more people that you have in your corner, it's going to allow you to be able to capitalize and take advantage of some of these opportunities. I still think personally, like our bread and butter is the B and C class value add deals. There's preference. Everyone has their own preference. I think the B and C class value add is going to be the safest space to play in right now. If there is any sort of correction or recession that comes up, then I think the A class property is going to be harder to find people that can pay $3,500 a month or more. I also think the D class properties, there's going to be people that won't be able to pay their rent. So, I think that B and C space is going to be the safest spot to play, and which is where we play right now. So it fits perfectly into our current investment criteria and portfolio. And so, I think there's going to be opportunities a lot. I think, equip yourself with good team, good people that could potentially raise some capital.
Right.
But man, I think there's also going to be a ton of properties coming on the market. I think there's certain operators that might not be managing their properties the right way. I've heard of people doing full distributions right now. There's a lot of uncertainty, and I've heard of people doing no distributions. I think there's a combination of what's right and what's wrong. It all depends on the property, but it's good to be preparing yourself right now for if something happens, then you still have funds to be able to operate your business plan and execute the right way. So
Excellent. So we have another question from, let me see, from my friend Nishma.
yeah, I saw a ton of questions.
Yeah, sorry, I just lost it. Yeah, what are the states you've invested in? Do you recommend long distance investing?
Yeah, great question. Our portfolio is primarily in Texas, guys. I live in Houston, Texas. It's a personal preference for me. I love being able to pop by a property whenever. We're a pretty hands-on asset management team and operator team, at least for the first 12 months. And even after that a little bit. But I think these properties take more than just a phone call every week with your property management company. I think especially these value add deals, they take more effort initially. An A-class property might be more stabilized and require less maintenance, but those B and C, you really got to stay on them if you're going to execute the business plan the right way. And so we like Texas. We have 4 deals in Houston, 2 pretty large ones in Dallas, Fort Worth. We've also got a 131 unit in Scottsdale, Arizona, and a 54 unit in Michigan. We're open to all the Sunbelt states, Arizona, Texas, Florida, even the Carolinas. Our top priority is Texas for sure. And that's not just because we think it's the best market. It's mainly because that's where all of our investor base prefers, so we want to tailor to our investors, and they all like Texas. So yeah, that's where I have done deals. And to answer the second part of that question, I don't think it's a bad thing to do deals in the market that you don't live in. What I do think it's important is to make sure you have somebody that's local, boots on the ground. I think that's really important. And like I said, the first year, you're going to want to be more involved, especially if it's more of a value add deal. I mean, even us being locally here in Houston, we have to keep our property management companies straight on our properties. We pop by and we'll catch things that they're missing all the time. And, if you're far away, I'm not saying it can't be done, but there's going to be things that fall between the cracks. And unless you have somebody local to go put a good eye on it, a good constructive eye on it, there will be things that will be missed, like no question about it. But not saying it's impossible. And if there's other people that have mastered that, managing properties from afar, then by all means, tell me. I would love to know. I would love to learn those, from those that have done that and done it at a high level. Keep in mind, I'm just 2 years and 2 months into this thing. I do not think I am by any means the, one of the top people at this thing at all. I'm still always open to learning from other folks. Hopefully that answers that.
Yes, of course. Very nice. So are there any more questions? Yeah, we have another question from Greg.
Okay.
How did you make your first deal happen?
Great question. Okay. So this one was fun. So I was exactly kind of what I told you guys before, how, you're focused on building. I was focused, at least for the first, took me 7 months to get my first deal. But I think I realized, and if you guys really want a shortcut to this thing, just find a way to add value to other operators that are already doing deals. Like piggyback off of their relationships, their success, their track record, their net worth, their liquidity, and just piggyback off them. And even if you haven't done a deal, sometimes people have this like mental block, right? Of, maybe they're raising capital and they're like, why would these people trust me? Why would they put their money with me? Like I haven't even done a deal yet, right? And that's a lot of pressure to put on yourself. And so my recommendation on that is, man, just remove the pressure from you. What I did, like on my first deal, my first big raise I was doing, I told people, I was telling investors, hey, full transparency here, guys. My name's Eric. Of course, I brought the deal to you, but you're not going to invest in this deal because of me. I'm new at this, but you're going to invest in this deal because the partners that I put together for this deal. In fact, my partner, Lisa, she's been in the industry for 14 years. She's got over 3,500 doors and her average annual returns are over 34% for her investors. So like I said, you're not going to invest in this deal because of me, but because of the track record of the team that I put together for this deal. And so what I've accomplished right there is two things. One, I've let them know that I'm new, which allows them to give me some grace if I make any sort of mistake. Right. But two, it also let them know that I have somebody on my team that can back it up if I do happen to make a mistake. And so it just allows me some grace, and it gives you the ability to be more transparent with your investors. But what I did on my very first one, I was spending the first 7 months trying to do this A to Z, build my own relationships with brokers. I was getting deals sent to me. They weren't really good deals yet. I didn't have a track record, so I wasn't getting off market deals. If you're getting those, awesome. You're doing something right if you're already getting those. But what I did is exactly what I just told you. I found a way to add value to an operator team that was already doing deals. And I heard this team, it happened to be Tyler Devereaux, Ryan Woolley from MFM, and they had a $2.5 million investor back out, a week or so before closing. And, I had been working on raising funds for the previous 7 months. So what I did is I just reached out, said, hey, I have investor capital ready to go. I could probably get funds wired in the next 3-4 days. And, at first they're like, no way, that's $2.5 million. Like, can you really do that? And I was like, yeah, I think I can. And I followed through. I just, I wouldn't commit to something if I didn't think I could follow through. And I did. So we wired funds. They brought me in as GP member of that deal. Wasn't a huge piece. I ended up getting 5% GP on that deal, but it was a big property, and was able to get me an acquisition fee of about $106,000. Paid off all $91,000 of my credit card debt. And then I bought the woman in the other room a big ring. And so that's kind of what I did to get into my first deal. Is I kind of removed the idea of finding a deal and vetting it and putting all the pieces together, and just found a way to add value to an operator team that was already doing deals.
I got a really quick follow-up question, and then I'm going to turn it over to Shane. But you said something very important, Eric. And I think in this industry, a lot of people kind of have it confused. Can you elaborate a little more on what you mean when you say you got to add value to a team, to someone? Because maybe some people aren't really, they don't understand what that means. Because it can mean many things, I think you named a few, but if you kind of just want to elaborate a little bit.
Sure.
For the people who are a little confused on how they're, you can tell us what that means. And now they're able to kind of like, the light bulb goes off, and they're able to do that to future partnerships.
Sure. Yeah. So let's go back to that first deal, for example. So on that first deal, just by chance, what happened was Tyler and Ryan announced in the network, they said, hey, we're doing due diligence on this property first. Anybody from the network's welcome. Come on by the property, come check it out, and come see how we do it. So I show up early, and, I'm one of 3 people that showed up. So 3 people out of the entire network. There was over 1,000 people at the time. 3 people came. Granted, I lived there, so I lived in Dallas at the time, so I had a leg up. But I probably would have traveled. I honestly would have. I was that excited and desperate to learn this business. So I showed up, and I didn't just show up and be a fly on the wall. Man, I was like, hey, put me to work. Like, literally, I will go walk units. I will take pictures. I will take notes. I don't even care. I don't want to be compensated. Just put me to work, man. I just want to learn more than I want money, and I want to be around you guys, and I want to hear how you think. I want to see how you act, like all of the above. And so I went there purely just to add value, and help out. And I just wanted to understand that process of due diligence, so we start walking units. We're just walking unit after unit. There's 224 of them. Took a long time. We didn't even get through them all that day. And we had a big team doing it. But then I saw, one of the partners, Lisa, was walking off to go do lease audits, audit the leases and figure out which ones were coming up for turn at takeover and all this. And I'm like, man, this is an opportunity for me to go get to know Lisa. So I spent a couple hours with Lisa doing lease audits and scanning leases and just chatting. And, by the end of that, she came up and she was like, hey, my husband and I, we really think you're going places. And, we think you got a good future. We'd like to take you under our wing and sponsor your next deal. And I was like, no way. And so what I did is I did, and I was like, ching. So, I knew her track record, but really, you guys, this stemmed from me trying to add value 2 separate times. One, by showing up for just to offer my help during due diligence. And then 2, to go help Lisa do lease audits. Well, next thing you know, when this investor pulled out of this same deal, I happen to have investor capital ready to go to place into this same deal. And so for me, like, to answer the question, Sergio, is like, the value add to this team in this situation was helping with due diligence and not expecting a dime from it. And then 2 was bringing funds to the table that they needed to close. And I think they had already used their extension. So it was like, we got to make this happen now. And, I knew there was a void and I just filled it. And so you look at like the main 3 roles in a business, right? They were like multifamily syndication. You got like raising money, you have asset management, and you have acquisitions and underwriting. So if you're able to, I would say the easiest 2 right off the bat to add value, the easiest ways would be to help with finding good deals and underwriting good deals and providing them to people that can take it across the finish line with you. And then 2, raising capital to get your foot in the door with deals. There are certain operators that will bring you in. If you can go raise $500,000 to $1 million, my team is included in that. There are certain operators that will go literally, and they will let you come in as a GP member of the team and let you participate on the partnership of that deal for adding value, for bringing in. And obviously, you can't, per the SEC, you can't just be, brought in or compensated for raising capital. So there will always be roles post-close. But we work through what those are, once we know that value's there. Right. So, we do something very similar. And so just keep that in mind. Also, just be aware, guys, if you guys are raising funds for other operators, I know there's operators in this space that will bring you in as a partner. If you're just raising capital on a deal, they'll bring you in as a partner, but they'll only give you cash flow and equity on the deal. They won't give you acquisition fee on the deal. So you just have to be cautious, ask the right questions. Our team at Gibby's Capital, we'll bring you in and we'll treat you as if you're a true partner with us. We'll give you acquisition fee, cash flow, and equity on those deals. If you come and bring that value, $1 million from you is $1 million less that I have to raise. And we'll put you to work on the backside so you can get a ton of exposure. We'll pull the curtain back. We'll let you learn with us and, make sure we're abiding by all SEC regulations, of course. But my whole motto is let's do more together.
Love it. Love it. So or if there's any follow-up question, I know Gabriella has her hand up. I was going to let her ask a question. See, Carlo has his hand up, or he's clapping, sorry. And then I'll turn the question over to Ryan, but Gabriella, please go ahead.
Hi, how are you?
Hey, Gabrielle.
Hey, so I wanted to know, like, for a new person like me, how do you raise capital? Like, how do you raise capital? And also, too, how do you find the right team that fits for you? And how do you trust the right team? How do you know if you're in the right team?
Yeah, I think you're hitting it on the head there with that question too, because you guys, the typical hold time on these deals, it can vary, right? But for us, it's 3 to 5 years. And so you got to imagine you're jumping into bed with these folks for 3 to 5 years. You need to make sure you guys like each other. And so I think there needs to be a proper vetting process in place for you as far as like figuring out the right team. First figure out what questions you need to ask to make sure that you're getting the true, nature of who that person is. Right. The last thing you want to do is get, into a partnership where you are stuck in that partnership with somebody that might not be a fit for 3 to 5 years, if not longer. That could lead to some bad situations. We almost got in one, grateful that we didn't. And it wasn't that the people were bad. It was that we just had completely different views on how to operate these deals. And that could have led to tension. And we wanted to make sure that we were working with people that were educated, trained, and, the same way that we were and had the same goals. So as far as finding a team, I think you're doing it right now. You're jumping on calls like this, Zooms like this, and just keep putting yourself out there. When I first started, it just happened to be during COVID. And so there were no in-person meetups really, which actually worked in our favor because next thing you know, there is meetup after meetup after meetup popping up virtually. There was hundreds of these things and I was jumping on every single one I could, man. And a lot of them at the end, and maybe you guys do this right now on this one, maybe you don't, but a lot of them at the end will do these little breakout rooms where they'll put, 4 people in a room and just let people network for 2 to 5 minutes. And then they'll do like 2 different rounds of it. And those are my favorite. It's like these open forums are great, but then when you get to connect with 3 or 4 people, and then the host can randomize it, and then they switch you up and you're connected with all new people. And man, it's like speed dating, but it is fun. I think it's a great time. So finding people, just make sure you click with them, make sure that you have the same morals and values as they do, and just keep putting yourself out there. And as far as raising capital, the same exact thing. I keep my mouth open everywhere. I'm, almost every single day I'm finding potential new investors. And it's because I'm talking about it everywhere I go, on the airplane, walking my dog park, doesn't even matter. I'm always talking about it, and I'm always asking people about them, their life, their profession. And then next thing you know, they're asking me about what I do. And that's the golden question. If you can get them to ask, what do you do? Well, now you're in exactly where you want to be at.
Okay, thank you.
No problem.
Great question, and certainly a good suggestion there, Eric, to perhaps start doing some breakout rooms on this call. We haven't done that yet, but it's a great idea. And so I know Ryan was going to ask a question about investor relations. I'm not sure if some of that was answered or not, but Ryan, you're welcome.
Yeah. But I just want to say that you have such an inspirational story, because I know you touched on some points that you wanted to retire your parents. And that was really like my biggest goal of doing this, is that I wanted to retire them. And then another thing is that you had no experience in real estate before this, and that was relatable to me too, because I mean my only life experience before this was high school, and that's not a whole lot of experience. So
And the world is yours, my friend. The world is yours.
And then how big is social media for you to find investors? Because I know that some people that I met at Peak and know say they don't use social media at all for their business. And then other people are telling me, oh, I should be posting, 10 times a day. Maybe not that much, but I should regularly be posting. So just what's your take on social media?
Great question, man. I think social media is an absolute must. And I'm just kind of pausing for a second so I can paste this in the chat for those people that are asking. Put my digital business card there, my phone number, email, our website. There's some podcasts I've been on in the digital business card, and the link I just put in the chat. So feel free to go there. But social media is huge. It is a must. I didn't realize how much until recently. But most of my investors are coming from social media these days. We put a big emphasis and a big, a big budget into our marketing and really ramping that up. Those of you that follow me, that you've probably seen a shift over the past 6 months, and it's working. Some of the things we're implementing that some of you guys might be able to do is we're not doing as much as I would like, but we're doing bi-monthly. So every other month we're doing an educational webinar, and we're blasting it out on all sorts of social media platforms. And, a couple months ago, I did one on oil and gas professionals and why they should diversify their earnings into multifamily real estate. This month, in 7 days from now, we're doing one on medical professionals and why medical professionals should invest in multifamily. And so, we're spending, I see this question right now, what's your average marketing spend? So we spend $3,500 a month with our marketing company. We have another company that we pay $750 a month for. And honestly, we're probably putting in no more than $500 to $750 bucks a month in ad spend. And so these other portions of it are just for services. But yeah, there's a ton of good marketing companies out there that can help you out. And, but yeah, I think social media is huge. LinkedIn, Facebook are the primary ones that I get traction from. But I still get a lot of people that reach out over Instagram as well. But it's a must. And you have to approach it from some sort of value add standpoint where you're just doing it to help educate the public. Something like this, just some sort of thought leadership platform. Just something to where you're putting out, relevant and valuable information to the public, which can attract more people. But another thing I'm doing, and this one's been actually pretty big, but it's taken a lot of effort, but it's been working. So when I go and call it a medical professional webinar, I'm going into different Facebook groups and I'm requesting to join them. These are not my industry. This is nothing to do with me, but it's increasing my reach. So I'll just search like different medical professional Facebook groups across Texas, across Houston, and I'm just trying to add myself to all of them. I get denied from a bunch, but to me, it's a numbers game, right? If I can reach more people, and then the people that I do get, they do accept me in, well, then I'll put out, my content about our webinar. Say I get into 15 medical professional, related Facebook groups, and I'm putting this out, and each group's got 100 to 500 people or more. Well, you know how many new eyes I'm getting in front of. And so that's part of the reason why, we initially started, we're getting 20 to 30 people on our webinars. Now we're closer to, 60 to 80 people per webinar. And that's still not where we want to be. I'd love to be over 100. And so I'm still refining that and, getting better each and every time. But yeah, social media is huge.
Man, that's amazing. And Teeny, we'll get you next. I promise. You had your hand raised for a while. Guys, Eric just said something. If you're gonna get anything about what Eric said, so here's the thing. I'm a construction business owner here in Dallas, Texas, right? For the longest, I was like, man, who's my audience? Who are my avatars? A lot of you guys are probably wondering that. Who the heck are my avatars? Where are my people? I know that Gabby asked that question, like, where do I find these people? Little did I know, I'm going to tell you my experience really quick in like 30 seconds. My avatars were sitting right under my nose. I'm a construction business owner. Here I am paying a lot of taxes. Here I am, paying all these taxes right a year. And I have that issue. So I was like, well, who am I going to go help? I'm going to go help all these people that are VPs, that are CEOs, that are presidents of these construction companies who have money. And those are the people I'm going to attack. So guys, for those of y'all, open your eyes a little. Like this was sitting under my nose for a whole year. I didn't realize this till like 2-3 months ago, and I slept on it. So for those of you that just heard Eric, like he just said it, like find out who your avatar is, guys. Like, and it doesn't always have to be in your industry, like you said. It can probably be people in the corporate world where you're working at. Obviously we're slaving. We're there working 9 to 5s. We're like, you know what? The hell with this. We don't want to do this forever. We're putting money into 401k. Why not push and help these people and teach them about real estate investing by telling them the benefits of doing the IRAs, So just for those of y'all who had that question about raising capital and who do I attack, they might be just sitting right under your nose, so you just got to think a little bigger. But man, that was awesome, Eric. I wish I would have heard you say that about a year ago. But Teeny, do you have a question? I'm sorry we had you waiting this long. What kind of hosts are we? Go ahead.
Tanae, it's Tanae. Hi.
Tanae, I'm sorry.
How are you? I was at the 10X Growth Con and was in the chat of WhatsApp, invited to this group. I am working with Grant on like operations and scaling, but Tyler Deverell and Ryan Woolley are my multifamily real estate mentors. Yes. I found them actually in October of 2021 and at JFK Airport. So I am a year into it, just launched 506C in September. So really excited. And this, so my initial question was, what's your feeling? You're in Houston, so you're probably going to answer this a different way than I want to hear it. I was told that Houston is flat. I'm getting a lot of deals in Houston right now. That it's, and Grant says, oddly enough, that flat lands is flat rents. And so now I'm wondering about that because I have a deal in actually Stafford and Katie have a 673 unit portfolio. Would love to talk about, looking for a sponsor, by the way. One of the complexes is in Stafford, one is in Katy, and one is in Austin. And so I was just wondering what's your take on that?
Sure. And I actually, believe it or not, yes, I'm biased to Houston because I live here, but I actually agree to a point. I'll give you an example. So we bought a property called the Oasis a year and 3 months ago. And we've actually, we project typically a 4 or 5% average annual rent growth when we underwrite our deals, and 4 or 5%. We try to be conservative with it. Well, on that property, it's 144 units. We've accomplished a 13% rent bump on over 100 of the 144 units in the last 14 months. So in that sense, yes, things are good. However, on the other side of it, and this is just me being as real as I can, on the other side of it, our other properties on average are averaging between a 7 and 8% rent growth. And so still good and still above what we underwrote the deals at.
Oh, that's
However,
nice.
still
Yeah,
above.
that's excellent. I mean, I have property in New Jersey and we can only raise it 4%. So I mean, like so 7 or 8% per year over year. I mean, you're winning no matter what. So that's fantastic. One last thing I just want to let everyone know that I have I don't know if anyone knows Alan Cowgill. He's been my mentor for over 10 years, and I learned how to do brunches with him on raising capital. And so for all my smaller 1 to 4 family deals, just like what you were saying, we've always raised capital that way. So I just put together a brunch, and I'm looking for collaborators because we have lists of accredited investors, and we're putting everyone in one room, and then also doing the online marketing, the geo target back to them. It's called the Legacy Tour Brunch. So if anyone wants to collaborate on that, raising capital, get some deals done, let's go.
Hey, that's a huge value add, guys. You should be reaching out for sure.
I'm actually talking to you too, Eric.
Oh.
I gotta call Brett Davenport because I got his number. I don't know why I haven't met you yet.
Yeah, Brett's the man. That's my father-in-law, and Tyler. Just those of you that know him know my story. Man, Tyler, he's opened up a lot of doors. He helped me a lot, but he also was the officiant at my wedding a few months back. So it's been cool building that relationship for sure. Couldn't speak higher of those guys.
Awesome.
So quick fun fact, guys. I want to actually, Tony doesn't know this, Eric. I don't know if you remember. I told you in person when we were in Orlando, but Tony, Jonathan, Eric's our partner technically. He's in McCollum. He's in the.
Oh yeah.
We're technically partners with Eric. We're in that 419 506C deal in Dallas, Texas, and obviously awesome, Massive and Hampshire came together, and we took that animal down. But just a quick little fun fact: we're technically partners with Eric, and it's pretty cool to say that. Here we are, doing this podcast together. Thanks to Shane. Shane and Ryan, they were like, "Hey, man, Eric, Eric, we got him." I was like, "Well, really?" So let's do it.
Yeah.
But that's awesome. Let's get some. I think there's some questions in this chat.
I read a couple of them, but that's
you want
good.
To go ahead and go off, Eric. Go ahead.
No, that's good. Appreciate it, partner.
Yeah,
no,
I like
one
the sound of that.
Yeah, one of them was, what's been the biggest challenges you face capital raising? I think I'll try to keep them short and sweet now. I know I'm not in a rush if you guys are, but I'm doing good. I just want to say, so like on this one, I think a little bit was my confidence at the beginning of why people should invest with me. But like I said before, realize that they don't have to invest necessarily because of you. If you introduce them to the opportunity, they can invest because of a partnership, or, one, because the deal is a good one, but really just, be transparent. But, I think a lot of capital can be raised if you just are yourself, and so I struggled with that at the beginning, but now I'll tell you this, fun fact, on my last 2 deals that I've done, guys, like I tell you how much I was scared to raise or had struggles raising. Well, on my last 2 deals I've done, it's been the first time in my entire time doing this, of all deals that we've done, where I had investors go from seeing my email blast to clicking and registering in the portal to signing subscription documents and wiring funds without even speaking to me.
Wow.
That's awesome.
Which actually, it sounds great, but it actually scared me because I'm like, wait, these guys don't even know anything about the deal. And I don't want that to lead to like an upset investor. So even though they did that, I still would go back, circle back around schedule a call with them and make sure they fully understood the investment. But that being said, I could not say that I'm not flattered and blessed because of that. Like, that is a target I had been shooting for a long time. And it wasn't a ton of them. I had 2 of them do it back to back on the exact same 2 offerings, but still, what that shows is that we're doing something right. You know, it shows that our communication's good. It shows that our investor reporting's good. And it shows that there's trust and faith in our team. And it just feels good to know, you know, especially when you don't know if you're doing it right, that, you know, you actually are. So hopefully that helps on that one. Next one is, how do you raise funds without a specific deal? You know, that one's tough. It's always going to be easier to raise funds when you have a deal. The urgency is higher, you have more passion, but the best thing to do is just nourish these people, man. Build a relationship with them and nourish them while you have them. You're going to be maybe finding people a little bit slower when you don't have one. So when you do build the relationship with folks, nourish it, reach out to them, you know, once a week, once every other week if you need to, but let them know what you're working on. Let them know the reason why it's taking so long is because you're so selective in your process. You know, let them know that you want to be picky. And so, you know, part of the reason why it's taking a little bit longer is because you want to make sure you're only bringing them good opportunities. And I think, you know, you just tell them, hey, we don't have any availability in any of our offerings right now, but once we have one that actually does fit the mold and fit the model, we'll surely bring it to you right away. You know, something like that. So. Yep, I did share contact info.
Really quick, guys, if you're learning something or if Eric's brought some kind of value, if you're having fun, we got 61 people in here. Please put some fire, let's interact in this chat. Let's show them some love. Let's put some hand claps. Let's do it all, man. I mean, hey, Eric's, like I said, like Shane said, Eric, you know, he took the time out of his day, his personal day, because obviously he's a very busy man. You know, he took the time to come show some love to us, to come bring us some value. I know I learned a lot, you know, and I'm, you know, me and my partners are about 2-3 deals in, but shoot, we're always learning. We're always trying to have an open mind. So guys, if you've learned something and Eric's brought some kind of value to you, I would literally want to see 61 people right now. Put something in that chat, put some claps, put some fire, man. Let's show them some love.
Absolutely.
Serge, you're the man.
Yeah, certainly will. Well deserved for sure.
Hey, good to see you on there, Caleb. Shout out to you, man. There's a lot of familiar face. I love it. I just met Shelby this last weekend. Good to see her. There's a ton of familiar faces. I know we're approaching the hour, guys. I don't want to push it, but I'm totally down to give it a little bit more time. If
we're good, let's keep it going. We got 61 people here. Nobody's shying away. Guys, hop in. Let's ask some questions.
I was going to say, Eric, little do you know, these things normally go for 4 hours, man. So I'm glad you're a little more.
Oh, so I'm cutting it short.
Yeah, you're good, man. Let's keep going. Let's keep going,
I mean,
guys.
usually 90 minutes or so, but it's entirely up to you. We are thankful that your time tonight.
Yeah, man. Thank you.
And so however long you're able to stay, that's fantastic. But long story short, I mean, I don't know if you see any more questions there in the chat or not. And I don't know if I'm skipping line or not. If it's Tony's turn, please go ahead, sir. I mean, I do have some other questions, although you've answered most of the ones I kind of prepared. But Tony or anybody else, you guys
go ahead, Shane. Go ahead, keep it going, Shane.
Okay, well, like I said, you've kind of addressed just naturally through the conversation. We've had several of the questions that I had proposed, but I guess let me come back to investor relations, because that's, you know, a huge role of what you do in your company. And we've already talked a little bit about that, but I'm also leaning towards really learning how and trying to master the investor relations and capital raising side of it. And so I guess 2 questions, and you've kind of already answered this because you said you're just talking to anybody and everybody, and you've mentioned social media. So this first question you might have already answered. Is where do you find potential investors? But then the second part of it, I was going to ask, you know, people typically run towards either pleasure or pain, right? They're either seeking pleasure or they're trying to avoid pain. And so in your initial conversations with investors, are you focused more on the pleasure of perhaps passive income and cash flow and more of the pleasure side of it, or do you touch on the pain side of it, of avoiding taxes and I don't know, kind of that's where I'm going with the question. But what are your thoughts on that, and how do you approach that when you're first starting your conversations with investors?
You know, when I'm first starting, my entire focus is on them. And I just want to get to know them, man, because like first and foremost, we got to make sure that this is a good fit for them. Like our model is what they're looking for. Our business plan fits what they're looking for, the entire, all of the above. So I'm typically asking about them, their lives, their kids, their dogs, like whatever makes them tick, and the reason why is because it helps me to get closer with these folks, and the more that I care about these people, the more that I want to fight for them and go to bat for them. So for me, I don't want it to just be surface level. Like I want to get to know these people on a personal level. Like one thing that felt really cool, we just spent $3,700 on investor trophies.
That's awesome.
Yeah, like I'll show you guys an example of one. So like I don't know if you guys can see this.
Yep.
So it's a good little investor gift. And I don't know if maybe some of you guys are on here now and I just spoiled it. So I don't know if any of my passive investors are here, but you never know. So, it just feels good. It feels good, and I think it's just getting to know people on a personal level. One, I'm a people person. I crave social interaction. And if I can just, catch someone off guard with a little Gibby's gift, and their appreciation and token of gratitude that they put their faith and trust in us. But I think just building that passion and fire to help people will help fuel you to go reach more people.
Awesome. Hey, and I guess a follow-up question, kind of a fun fact question, kind of completely off of that topic. But I know when I first met you at the first 3-day event, and then, kind of starting to follow you online for a while, I spent a period of time wondering, man, how did he come up with Gibby's? What is that about, right? Because you see a lot of people with names related to like financial stuff, right? And I think I've heard the story, but heck, I have an opportunity to ask you now. So how did you come up with the name of your company? Where does Gibby's come from?
Yeah, happy to tell you. You guys probably all have your own names and I for your own reasons. And I think it's just important. Like for us, we wanted something that stood out, but also something that meant something to us. So, I initially started my own entity before I brought my partners in, and then my partners, by the way, are my wife's mom and dad. So we are a family operation. Our tripod is all family members. But when Brett and Megan Davenport joined my team, I brought them in. I was doing this for, a couple months right before they came into this. And anyway, Megan was like, we're all from Denver, Colorado. And so, but we live in Texas now. So Megan mentioned, why don't we be Gibby's? And I knew I had like heard the name somewhere. I was like, what is Gibby's, man? What is that? I know what. And then I was like, wait a second, like the sports bar in Denver? And I was like, so confused. She's like, yeah, that's where Brett and I went on our first date. And I was like, no way. She's like, yeah, why? And I was like, that's where I took your daughter on our second date. And so, it's where Brett and Megan went on their first date. It's where I took their daughter on, one of our next couple dates. It was just cool. So we're like, we got to be Gibby's. So we're Gibby's Capital Investments.
That's awesome. What a great backstory to how you guys came up with that.
Yeah, it's fun.
Cool. I see. So there's a few hands up.
Yeah, let's get them. Let's get them.
I'm not sure who had their hand up first.
I think it was Will.
Yeah.
Okay.
What's
All
up,
right.
Will?
Wait, there's how many Wills are there?
There's Will Gonzalez.
Okay.
Will Gonzalez, show your face if you can, buddy.
I honestly, I'm sorry, I can't. I'm
you're good,
actually
brother. I'm
working
just
while we
teasing.
do this.
I'm just
crunching
teasing.
away at spreadsheets in the background, believe it or not, which kind of leads to my next question.
Sure.
Yeah, you kind of came from your day job, and I'm realistically going to be working in advertising still, at least for the next 5 years, because this is like the best way for me to build my wealth.
Sure.
So as far as planning goes, right, when you take a leap of faith in yourself and do something entrepreneurial, most people wind up going into debt, and they rack up those credit cards or take out personal loans to get themselves through.
Mhm.
And I've seen it happen to people and they succeed. My friend's done it and I've seen them sweat it out. I try to avoid that as much as possible. So,
Okay.
yeah. So, what I don't know. I'm curious to know what you did, right? And
yeah.
when was that last W-2 check? And when was the first time you received cash flow that you were able to survive on?
Sure. Yeah. Great question, man.
And it's funny because I'm as I'm talking to you, I'm crunching away at spreadsheets for my full-time job. So
Okay.
yeah, I love it.
So backstory is like I I was in the solar industry. So I ran my own solar company. And when I found multifamily for the second time and actually realized I was going to go all in,
Right.
and I realized that like my day-to-days were pulling me more towards multifamily than it was solar. But I was running the company. So, I was waking up and working probably 12 or 13-hour days doing solar and managing sales reps and, overseeing install process. There was a lot of moving parts, but so like I was doing like, it doesn't, I guess what I want you to know is it doesn't have to be one or the other. They can coexist
Right.
for a period of time, right? Obviously your business will boom once you can go full time, but I was running my solar company for the entire first 7 months until, until I got my first deal. And I'll be even more transparent. I wish I didn't step away from solar right after I got the first deal, even though my portion of the acquisition fee was 106 grand. I spent a lot of it on paying off debt and buying a ring. So, I wasn't in the greatest financial position, even though I just acquired a 224 unit building. Cash flow on some of these properties doesn't kick in for the next 6 to 9 months. Right. So a lot
Right.
of times you're not taking cash flow distributions until the property's stabilized. So, I just spent everything I had made. So anyway, long story short, I didn't really start feeling like I was really far ahead until my second deal. And then we got a nice $650,000 acquisition fee and, split that with a few teammates. And, we were all happy and dandy from there, but the business really boomed after the second deal for me. So if I was to go back and redo it, there was a period of time where things got tight again from the first deal. Even though we got an LOI accepted 10 days later, we didn't close until, a couple months later. So 2.5 months later or so. And so I would say keep doing what you're doing until you've got some momentum and you can go duplicate this thing time and time again. I know they say like burn your boats, burn your ships. Like if you can do that smart, do it. If you're putting yourself into, a high risk situation, you get what I'm saying.
Yeah.
Eric,
Yeah. Totally.
yeah, can you, Eric, can you explain what acquisition fee means for,
Sure.
we have some people here that may not know what that means.
Sure. Yeah. So an acquisition fee is a fee that we charge at the close of the deal for us structuring the deal, for finding the deal, vetting the deal, putting together the team, raising the capital for the deal, guaranteeing the loan, and executing the entire business plan post close. So that acquisition fee, there's two sides of the business, right? You have your GPs, general partners, and your LPs, limited partners. And the LPs get to take advantage of all the cash flow and equity on the deal, but the GPs, they get cash flow, equity, and also this thing called an acquisition fee. And the typical, it's different across the entire industry. I've seen as low as 1%, and I've even seen people not take an acquisition fee. But usually you'll see between 1% and 5%. The way that I was taught is 3 to 5%, and I've gotten 5% acquisition fee on every single deal but one. So, you can do the math on some of these things, but I'll give you an example. We did Dover Point last year. It was a 168 unit deal at a 5% acquisition fee. The acquisition fee was $800,000, and you split that not with your passive investors, but just with your general partnership team. So your owner operator team. So, and here's the beauty of these things, guys. Like I said before, there is enough good to go around. That is a fact. No need to be greedy in this business. Find good people and tackle this with them, and split the acquisition fee according to what the value is that's brought to the table for these deals. No need to be greedy, like I said, but that's the acquisition fee. It's a fee that we get upfront at closing for putting the deal together and executing the business plan throughout the hold.
Excellent.
And
Thank you.
I saw a question come in. Can you still underwrite a 5% acquisition fee? We're always underwriting a 5% acquisition fee. There has been times where it's been harder. That's the last thing that we want to change. You look back, I told you guys about my first 7 months, right? Well, I told you it took me 7 months to get my first deal. Did I mention at all how many offers it took before I got my first one accepted? Or did I not say that?
No, you didn't say that, or LOIs you submitted before you got one accepted, but please share.
I submitted 27 offers before I got one accepted. And so, sometimes these offers, they're not just something you whip together overnight. You're doing market research. You're going and walking the comps nearby. You're secret shopping the neighboring complexes to figure out what, your property is going to have that theirs doesn't. Like, you're putting in, there's a lot of market research. You're doing the underwriting. There's a lot of, to us, at the beginning, when you're new, some of these offers and these LOIs were taking 1.5, 2 weeks to put together. And so that to us was a lot of LOIs. But yeah. And so like, to me, part of the reason, to bring it back to the original question, part of the reason why we're charging 5% is, one, we know the value that we're bringing to the table. We know that we're going to give our investors strong communication, great monthly reporting, strong quarterly reports. And also we know we're going to go hit our return projections for them because we're doing it conservatively. We're going to underpromise and overdeliver. And right now, especially with the way the market is, the economy is, people would kill for a 15% return. If we can go give them an 18% or above, these folks are going to be ecstatic. And so we just want to keep performing for them. And so for those reasons, we know if we underwrite the deal the right way, then, we know we can go, confidently tell people yes. And honestly, I never even get asked about the acquisition fee. We always show it in our pitch decks. If any investors ask, then we'll always tell them, but we know our value is there. So we'll always, put 5%. I will say this, on our latest deal that we just did, that we just got an LOI accepted on, we did actually drop it to a 4%. And we also dropped the asset management fee from 2% to 1%. And it's what we had to do to make the deal work. So, I hear what you're saying. Things are getting harder. You have to get a little bit more creative. And to answer your question, Tenny, and not Teeny, but you have to get a little bit more creative. And that is even more, it's more important now than ever to have somebody that knows the numbers inside and out, to have a very strong underwriter on your team, and someone that isn't just doing it to make the numbers look good, because anybody can make a spreadsheet look good. Anybody can make the numbers look good, but will they really yield the returns that you're looking for and that you're projecting for your investors? Who knows? And so that's why I'm grateful for Brett. Brett does all my underwriting. He is, one, extremely conservative, but two, we say no a whole heck of a lot more than we say yes to deals. So I know if he gives me the green light on one, then I know we're good to go start raising funds for it.
That's awesome. That's great. And so, Tony, I don't want to step on your toes, sir. I know you were still asking, or you just asked questions, but there's a whole plethora of people with their hands up. And if Sergio, if Tony, you guys are okay with that, we'll just start going down the line here.
Let's do it. Let's do it. I'm actually one of them in line.
Let's
you
go.
Want to skip line, sir? Or you want to wait in line? It's up to you. So we'll just go with Ike because he's the first one on the top left here. Ike, you're welcome to go ahead, sir.
Sorry guys, turn off my screen. Hey Eric, thanks for getting back to me today. I had a question. No, where do you see the Dallas market going? And then my second question is, does Gibby's Capital give back a portion of their earnings to the sports bar there in Colorado? Or no?
Oh man, that's a clever question, man. I love it. No, we don't. Unfortunately, I would love to, but unfortunately, Gibby's, the sports bar, didn't survive throughout COVID. So we are the last remaining Gibby's. So, that might be something we did if they still existed, but unfortunately, that's not the case. But anyway, Dallas, man, I love Dallas. I think you can't go wrong if you're looking anywhere DFW. There's a ton of opportunity, a ton of inventory. That's probably where a lot of my focus will be personally. DFW, Houston primarily, but maybe some San Antonio. But I love those three. But Dallas has got, I think, nothing but good things coming. So.
Okay, and just one last one, because I know there's people who are not all in MFM, but in MFM, seems like anything you want to present a sponsor an ARR of above 20. Is anything below 20 still good? You just mentioned like 15%, 16% because the market is the way it is, but is that actually the case?
Yeah. Oh yeah. Yeah. I mean, typically I would say I'm seeing deals, not just from our group, but just operators and other networks as well. I'm seeing people project 16% returns and 6% preferred returns on their deals. That's what I'm seeing. We're not doing that, but I'm seeing people put offers out there and deals out there like that. For us personally, you know, we always shoot for 18 to 22. And so we never, and even if you do hit 20 with your underwriting, I would still give yourself some cushion and still just go project maybe an 18%, 18.5%. But we're doing 6, 7, 10 different versions of the underwriting. And we're giving our investors the worst version that we have, our most conservative version. Because if we go tell them 18 and then hit 26, then, you know, we're heroes. But if we tell them 18 and hit 16, now we're in the doghouse. So.
Okay, thank you.
Yeah,
Yep.
absolutely. Thank you for the question, Ike. And so Carolyn, you're up next, ma'am. Please go ahead.
Thank you. Eric, thank you very much for what you've shared tonight. And you sound, it sounds like you have a great team. I would love an opportunity to be a general partner. I mean, not earning any money, but learn as you did, but I'm in a northern state. I'm trying to get to a southern state, which is much better because I want to be near a property to learn from the property and the people investing in it or working on it. So that's a goal. I also have cash, but I'm not an accredited investor. So do you accept non-accredited investors or money from them?
Great question. I think there's a lot of people that do. You know, I would first throw it towards, you know, some of these guys on this call. Some of them might have 506B deals that they're doing right now. So I'll kind of let them speak to that. But yeah, I think there's tons of operators that will accept. There's 506B funds. I know some of these guys nodding their heads right now have some 506B opportunities. So I'll let them pick. But yes, and in general, what I would tell you is even some of these deals that are open to accredited investors, sometimes what operators will do, and we've seen this more and more happen as of late, is they'll do something called a 506B to a 506C offering. So there will be a short window where you can take non-accredited investors, maybe for 2 weeks or 3 weeks. Then they'll close out that offering and open up a new offering for the same property, but as a 506C offering.
Okay.
And so, yeah, I'm sure some of these guys will share some of their opportunities, but yes, there are, you know, that might be a good question when you're talking to operators to see if they, you know, if they have, you know, 506B or if they're open to non-accredited investors. Okay. But I know there's definitely some people are, and we do the same as well.
So you do occasionally. Okay.
Correct. Yep, we do.
Thank you.
Yep.
You're welcome. Thank you, Carolyn, for that. And Sergio, you're up next.
Yo, what's up? So obviously, Eric, you know, we've been talking about capital raising. Everybody's going to these events, they're networking. We're meeting new people, you know, possible investors. What are some tips or how do you really just keep up with all your investors and just stay in contact with them? Because I've met so many people last year. I went to like different events, obviously multifamily mindset events. I've went to 10X events, my own Sunrock events, other capital raising events. So I got this somewhat of a CRM system going on of all the people that I've met, and I've inputted their information and their emails in my system. But maybe if you want to give some tips on to everybody that's about to start raising capital after this call, because obviously, you know, now they heard you say it, that they're always talking about what is it that they're doing. Maybe you can give us some tips. And I'm curious myself, like, what are some tips that you use on just to really stay connected with your investors? Because I'm sure you got a lot.
Yeah. So it's different. If you have if you're looking, are you talking about like passive investors? Are you talking about like capital raisers?
Passively. Yes.
Okay. Yeah. So first thing I'm doing, man, as our investor database has grown and grown, we're now at the point where we've got 600 or 700 investors in our database. Now, not all of which are active. You know, I would probably say closer to 200 of them are active that we can pull from on any given opportunity. But man, it gets harder when you get that many. And so you need systems in place. And if you guys don't have systems, I would start working on them now, so you don't run into some of the issues that we're having. But we've enacted some good ones. But what we do is we typically, well, one thing, we do a monthly report for every property that we have. So each and every month, a property specific report goes out to a certain list. We sync our website with so we use WordPress, and it syncs with our Active Campaign, which is where we house all of our investors. Active Campaign is an incredible tool. I don't even know how to use half of it, but it is amazing. And the half that I do know is amazing. So Active Campaign is great, but we also do a monthly newsletter. But what I typically do is I'm filtering people through our website. And when they go join our investor club, it automatically puts them into a 12 email drip campaign. This is something you got to automate it, right? This is something I'm not doing one thing for. Put the legwork in at the beginning to where someone goes, signs up for our investor club. Now they're getting a sequence of 12 different emails, educating them on multifamily, educating them on our model, and educating them on who we are as a company, to make sure that they feel comfortable with us as a team. And if they do, at the end of the 12 emails, it'll beckon them to go book a call with us and one of our investor relations specialists. So, hopefully that helps. But I think too, just try to protect your time. Figure out who the people that are serious are, and then also too, what I would do is I would definitely, like, after the event, every single event, when you meet someone new, you need to be reaching out to them, on the last day of the event, and follow up like the day after, right? Because there's so many people that could be flooding them. Do something to stand out, but just have fun with them and leave a good impression when you leave these things. So
That's awesome. Thanks, Eric, for that. And of course, we're going to continue on with the rapid fire questions here. I hope you're ready, Eric. Of course you are.
I'm ready. Yeah, let's do it.
But anyway, I was also going to add to that, you guys, Gibby's Capital, right? I mean, I would say go look at their website. I've always been so impressed with what your online presence is, Eric, and your site, specifically the videos you make explaining and introducing Gibby's Capital to the world. Phenomenal what you guys do. And I would certainly encourage anybody to model what Gibby's is doing, not copy, but model it. And it'd probably lend yourself well. So anyway, with that, let's go ahead and go to Michelle, who has the next question.
Hello. Thank you.
Hi, Michelle.
Thank you, Jonathan, for the invite. I met Jonathan, Sergio, and Tony a year and a few months ago now, when they met each other. And we started learning together, and I've watched their whole journey, and they're killing it. And I can't wait to be on a deal with them.
Hey, they're rock stars. I think Sergio has been one of the best hosts I've ever seen.
Thank you. That means a lot. I thank you so much. I'm kind of brand new at this. This is like
killing it, man.
Well,
Thank you, man.
I'll add to that real quick if you guys don't mind. So you're absolutely right. Sergio and Jonathan and Tony, they're everywhere, guys. Every event I go to in DFW, Sergio is there. Of course, he was in Orlando with us last week too, but absolutely, you're dead on there. And let's not forget either, guys. I mean, Sergio, Tony, and Jonathan, I mean, they've got like 1,000 doors under management right now, so they're making some waves in the business too. Anyway, I'm sorry, Michelle, please go ahead.
Trying to get on Eric's status, guys.
Hey, I'm just barely there, man. So you
do
teach
have
me
a
how to host,
question.
and I can teach you to do a couple more.
That's a deal. Let's do it.
Deal. All right, Michelle, you're up.
So I was curious, what does it look like once you make your first deal? So you get your acquisition fee, but then what's the work to do once it's closed? Is it just doing the same stuff for getting the next deal, or do you have to do work on this one?
Great question. So I mentioned it earlier, but there's a few different roles of this business that are important. You have, acquisitions and underwriting, you have a sponsor, you have a capital raiser, investor relations person, and then you have an asset manager. And the reason why we target these bigger properties is because, the bigger properties have enough cash flow to justify us paying a third-party property management company to manage the asset for us. As we become owners on these deals, we want to work on the business, not in the business. And so that's part of the reason why we like the bigger ones. They're easier to manage, but at the same time, you have to make sure you're vetting these property management companies the right way, because some of them drop the ball. You got to stay on top of them. We filtered through a couple of them ourselves, but the beauty about my role is, we are an entire team. I'm just one person of it, so Gibby's Capital there's 5 of us and 3 partners, and, I don't even do any of the asset management. So the beauty is, like with us, and we work with families, so we split our business minus profits and the other members. We do everything a third, because we're family members and we wanted things to be very fair and even. But after we close on a property, the beautiful part for me is I don't even have to go to the properties anymore. I totally will if I need to, but really, my mother-in-law, Megan, she's got it on lock. She's very organized. She's very structured. She is a freaking kick-ass asset manager. And I am so grateful to have her, because she can multitask and I'm a guy and I just can't. I do one thing and I do it really, really well, but she knows which properties, which units are coming up for, lease renewal, which ones are, tenants are moving out, like all sorts of stuff. She's very on top of it. And I think that's the beauty of having a team, but yeah, so to answer your question, me personally, I don't do anything unless Megan might need help from time to time, but really she's got it. And the asset manager's job is to manage the property management company, not to be the property manager, but to manage the property management company.
Okay, thank you.
You're welcome.
Good stuff. Yeah, thank you, Michelle, for the question. So Clyde, sir, you're up next. You're good. You're on mute, sir.
You're muted. You muted, Clyde. Welcome, bro. Welcome.
Appreciate it. Like everyone said, thanks again, Eric, for coming out to share all your experiences and your knowledge. So I have 2 questions. The first question is, I know you mentioned about having like a 5% acquisition fee typically on your deals. And you also mentioned, I think one of your deals was like 4% plus a 1% asset management fee. So what's typically the asset management percentage that you're going for on your deals? And on top of acquisition,
2% asset management fee, which is paid monthly.
Okay. So that's typically the looking for. And then my second question is, I had the opportunity to go to Peak Partnership last weekend. And I guess my question is like, I saw, this was my first time seeing people present actual deals to sponsors. I think it was like 3 different groups got up there. Well, it was like 2 individuals, 1 group. And I just was wondering, like, what's been your experience with that as far as like pitching to sponsors? Was it something similar to that, where you guys kind of had slides and you were kind of walking through them and speaking through them, or kind of just speak through your experiences of pitching deals to sponsors?
Whew, I'm so glad you asked this question, because I have had good experiences and I have had bad, and I'll tell you guys both of them. Like I said, I'm an open book. So yeah, I think it's an awesome opportunity. Hats off to the people presenting. It's never easy to get up there, especially in front of that many people, and present a deal. I had my very first experience. This was October of 2021. Wait, was it? Yeah. October of 2021. And it was pretty cool, but I got to go present at a Shark Tank event in Dallas at the Ultimate Partnering, multifamily conference. It was in Dallas that year. And anyway, there's a panel of like 8 sharks, and it was called Shark Tank. A panel of like 8 sharks. And there's 4 presenters. They sent out an email like a few nights before. And I remember being like, man, like, we got this deal. This could be a huge opportunity. Well, I didn't know there was going to be like 700 people there. And so, I saw it as an opportunity to get in front of more people. And, a lot of the folks were trying to get sharks on their team. But me, I was actually tailoring to the audience. I was actually looking to potentially find investors, and we found quite a bit. But, I got up there and I realized, like, I think what worked for us is we put together a little slideshow, a little presentation, but it was a mini condensed version. We tried to keep it short and quick to about 15 minutes. And so it was a little bit different than at Peak. There was some hard cutoff times. And so, I think, like, we got up there, we went through a little presentation, and one thing that we got a lot of compliments on is we played a little video at the very beginning. So if you guys are ever in a spot to present, like, throw up a little 15, 20-second video or 30-second video, showing about the deal, or some drone footage or something different than what everyone else is doing. Like that's definitely what we did. And I remember we played ours and people were coming up to us and like, they remembered our video. That's what they remembered first and foremost, because we had background music and it was like, it was a deal in Texas. And so we had like this Texas background music, and I try to play it for you guys, but I'm not a musician. So I just leave it at that. But, and so, but people remembered the video more than that. And then what we did is, you know, I knew that I was more of the people person and, you know, the outspoken one, but I also knew that, you know, we're going to have sharks up there. And so the sharks were probably going to ask in-depth numbers related questions. And, you know, I wasn't the one that underwrote the deal. So I brought up my father-in-law with me. So I started the presentation, you know, did a little intro, started the video, got some laughs from the audience. And then I passed over to Brett and he went through some more in-depth numbers, and it was a 1-2 punch combo. And we, you know, I don't want to say anything about the other presenters, but I think the first guy got, I don't know, maybe one of the 7 sharks that were interested. The second one, everybody loved him, but his deal was in a market that not a lot of the sharks really wanted to participate in. And then we were the third presenter. So the second guy got, I think, 2 of the sharks. And when we went, we got 6 of the 7 sharks. And the only reason the 7th shark didn't is because he only did deals that were 200 units and above. So he said he would have done the deal, but he really wanted to potentially work with our team. So anyway, we were just flattered and just grateful. And, you know, we learned a lot from that experience. So I think combination of, you know, some sort of presentation, but also something that's different, because a lot of people are just going to get up there and spit the numbers and show some pictures, but do something that stands out.
So not just focusing on the numbers, because the numbers are important, but make sure there's something else that kind of stands out about your presentation.
Yeah, but also, yeah, it's a give and take a little bit, because if you go too long, then everyone's going to be like, hey, you know, what's this guy doing? You know,
Right.
like you just have to play the game a little bit, figure out what you can get away with time wise, but get into the meat and bones of the presentation pretty quick, but definitely stand out for sure.
Okay. Appreciate that. Thank you.
No problem. Who's next?
I was muted. Sorry about that. So thanks, Clyde, for the question. Nice seeing you tonight, sir. Eric, certainly want to be respectful of your time. You know, we're 34 hour and 34 minutes after. Of course, there's more questions. It will go as long as you're willing to go, sir.
Okay. How about we do this? How about we do, let's get these questions answered, because I want to make sure I'm adding value to everybody that, you know, has some questions here. So let's get them answered, and I'll just try to be short-winded. It's hard. I talk a lot, but hopefully you guys like it, but I'm just
we love it. We love it.
Yeah, you're pouring a tremendous amount of value into the
everybody. Thumbs up in the chat, please. Let's show Eric some more love. Let's thumbs up the chat if you're loving it. We're an hour and 30 minutes in. Let's get this chat going. Come on, guys. Shit. MFM, show some love.
All right.
That's right. There we go.
There we go. It's on fire again. Let's go.
All right. So if we just, I'll try to rapid fire them, and I'll try to give some quicker answers. I want to get Marcos going, and then Andrew and Kenny, David, or Davide. I'm not sure.
Well, so with that being said, I won't ramble. Go ahead, Marcus. Let's fire away with your question, sir.
All right. I'm not, hey, thank you for being here. Quick question.
Sure.
With so many events around the country, which ones do you choose and why?
That is a great question. You know, we try to make a presence at all of them, and whether I can make it or I can't, we try to put someone from our team at all of them. Like I was supposed to go to this Hero capital raising one in Dallas recently, but I got called to another event. So what I did is I sent 2 of our team members to the Dallas one in my place. And so, you know, I think it's just a matter of like trying to get to as many as you can. Like when I first started, I was going to every single one, and these are some hefty investments though. Some of them, you know, they're spendy to go to, you know, and so pick the ones that you just have to figure out where the value is going to come from and know what you need to make that event worthwhile for you, for the cost of it. And then just like I said before, reverse engineer it. Like if you're going to it and you're spending $2,000 on a ticket or $1,000 on a ticket, we need to know you need to go get at least $1,000 or $2,000 worth of value from that event. So in your mind, when you're flying there, traveling there, like what is it that's going to give me that value? And then just go seek it, attack it, and go there with purpose and intent. But I think there's a ton of good events. Really, you know, the event will be what you make it though.
Gosh, you summed that up nicely. That's great.
Yeah, thank you.
Yep.
Awesome. Awesome. Okay, well, let's fire away. Andrew, you're up next, sir.
What's going on, Eric? How you doing, bud?
What's up, man? Good to see you again. We had a great chat at Peak.
Yes, we did. We said shout out to Sergio as well. The dude's doing many great things, even on the offside, like on the WhatsApp chat. So shout out to you as well, Sergio, brother. Thanks, man.
Thank you, sir. Thank you, brother. Thank you.
Yep. So Eric, the question I have for you that I've been getting questions on, and I want to get your professional opinion a little bit as well on this chat, is I've been getting hit up like how important social media is. Sergio, I've been talking to you about this as well. Like what's for people who are just getting started with this, they're like, oh, I'm not really on social media. I don't know if that's going to help me with my investment, with my business plan. What are some personal stories that you could you could share with me and with everybody here, the importance of social media and the presence on there for everybody?
Yeah. And I mean, I can kind of go back to, I think it's really important because, and I'll tell you why, especially at some of the early stages in your business, man, because when I first started, those of you that know me, I know I come from a sales background, right? I told you guys I was in solar. Sales is very competitive. I'm a very competitive individual. I think that drives me and, my performance sometimes, but also at the same time, because of that, call it insecurities, call it whatever you must, I'm not sure. But I come from, like I said, a competitive atmosphere where I did pretty well. And, I was in the direct sales space for 14 years and did really, really well. So because of that, like I had this mental block to where, I was seen up here in the current industry that I was in, but I was actually scared to go post on social media because I didn't want to be seen as someone that wasn't an expert. I was coming from a spot where I was an expert and I had too much pride, ego, I don't know, whatever you want to call it. But I was scared to post on social media. So believe it or not, my very first post I made, and you guys can go look back, but if you go look at my very first post I ever made multifamily related was when I closed a 224 unit building. And so, I thought that would be the right way to play this, right? I'm like, you know what? Like I want people to see me as the pro, like the expert, like I know what I'm doing. And so I waited until I closed a deal. Well, I kid you not, man, it had the complete reverse effect. Like the reverse effect. Everyone was like, wait, you were just this solar guru and now you're a real estate expert overnight. Like, and so it made them doubt it and made them question it. And so if I was to go back and redo it, so I actually had to back off from my personal network for a while and just like humble myself. And, I wasn't trying to raise any funds from my personal network because I wanted to build that credibility back up because I felt like it actually hurt me. And I got some good feedback from one of my best friends, and he was like, man, it just doesn't look like it's real. Like, how do you just go buy and I was like, man, that's crazy. But what people didn't see was the last 7 months of me getting rejected, the countless hours of studying this stuff to become good and learn this from people that were better. And, the 40 grand that I spent on education, like all this stuff that people didn't see. And so that's okay. I don't need them to see it. But if I was to go back and do it again, I would have started posting from the very beginning and documenting my journey when I wasn't even good to where people knew that I was making progress. So by the time I did have a deal, people knew that I was well connected. People knew that I had a network behind me. People knew that I knew what I was doing and I was, knowledgeable in the topic, not just like, boom, he's just good at this. It's because that's not at all how it was. So yes, I know that's a long-winded answer, but social media is extremely important. Find a way to add value to other people. You'll start getting more and more followers from it. And also more and more people that respond to you. Each and every post I make right now, I'm probably getting, depending on the post and, time of the week, probably between 7 and 15 people that reach out on every single post that's multifamily related. And, that seems like a lot to me right now. Cause when I first, I'd hope to get a thumbs up, but I'd hope to get a like or something. But now it's like, there's 7 to 15 people that are engaging, and not just engaging. They're asking about deals. They're asking about investing. They're asking how they can get involved and how they can learn this stuff. So it's becoming more and more fun.
Thanks, man. Hey, I just want to leave with this real quick. Eric is such a good dude. Think about this. That lovely lady asked about how he invested. And this man right here said, hey, I think there's a bunch of people here that are looking for, that need some deals. That's the type of guy Eric is. So man, dude, love you, brother. Thanks so much. I got to go. Thank you guys.
Love you back,
Thanks.
man.
That
We'll
that
see you,
is
Andrew.
awesome, and definitely deserves some claps and fires and everything, because he's dead on.
For
That's
sure.
that's great. I mean, I'll tell you, Eric, I don't know how many times I've got to hear that. I'm glad you just said that again, because man, I'm in that same boat right now where I got to peel the Band-Aid off and just start posting. I mean, Sergio's told me that a dozen times, and I've heard it from a dozen other people, and man, you're just kind of driving an excellent point right back home. So thank you for sharing that. All right, so rapid fire to the next question. So we have Kenny and Ken. So Kenny and Ken, right? Father and son, which met at Peak for the first time last week. And so you guys, please go ahead, ask your question.
Well, I have a couple of questions. Hopefully they're quick and easy, but Shane and
Yeah.
Ryan, thank you for the invitation to this, first of all. And Eric, thank you for all the knowledge you're given as brand new beginners that we are in this business. And it's a bit overwhelming. But at the same time, I'm fired up, excited. So really there is so much to learn and so much to do. I don't know how to word this. How do you channel your energy on what you needed to do to get the ball rolling? I mean, because there's so many different things we can look at. We can look at the deal, and we can look at the needing to get investors, and I know we will build a team, but what do you think would be your gold nugget on how to just kickstart on what to focus on?
Sure.
And secondly, and how would you pick your market in that? And then Kenny will have has a question here when you get done with this.
Sure. So let me start just by saying, man, like I think for too many years, I talked to you guys about like me being in the direct sales space, and for a few straight years there at the end, my production was dropping quite a bit for like 3 straight years. And it's because I was waking up with no passion, no fire. And I'm telling you, like, find the role that gets you out of bed. Find the role that you enjoy doing. I spent too many years doing something that I didn't like. And all that did, I was chasing after something that I wasn't passionate about, didn't have fire for, and it led to me not having good results after a certain amount of time. Nothing against the solar industry. I think it's great and I love it. I really do. It's just, I lost passion for it. So, I'd been doing it for 14 years. So it's just a long time. And I think just do whatever gets you up out of bed. Like focus. I saw someone put in the chat earlier, focus on your strengths and delegate your weaknesses. I could not agree more. And if you look at my team and the dynamic of my team with Brett and Megan Davenport, like Brett is he's a numbers guru. Like he really is. He is an Excel spreadsheet master. And so like when he first wanted to partner with me, he's like, I want to partner with you. And I was like really hesitant to work with my in-laws. Right. But he busts out this spreadsheet and he's like, look at this, Eric, look at this. And he changes one number and it changes 14 other numbers on that tab and then 12 on the 3 other tabs. And I'm just like,
yeah, I get that. Yeah.
I was like, yeah, I can't do that. You're definitely going to be my underwriter. So yes. So, it was great because he focuses on that, but I'm a people person. I crave social interaction. I love to be around people and get to know people. And I like, big rooms like Peak Partnership or the 3-day boot camps for MFM. If Brett had to go to one of those, he would not enjoy himself, And so we just kind of focused on what we enjoyed. And Megan comes from a construction background. So I think to answer your question simply, you need to get a foundation of the entire business. You need to understand you need to understand the entire business to a point, but then specialize in what you enjoy doing. So that way you can get up and have fun, and it drives your production. But that's kind of my 2 cents. Yeah, get a foundation, and then definitely learn the numbers. Like you need to learn the numbers so you can communicate. But I will say this: it took me about 2 months to even talk the talk. It took me a long time, and I had to practice it. I was studying it. I was putting myself in situations. I felt so lost so many times, and I was just like faking it till I made it. And then eventually it just starts becoming more and more familiar because you're submerging yourself into these situations that you're uncomfortable with. But eventually you start to become comfortable with the uncomfortable. So hopefully that
How
helps.
much did you rely on the Peak team? Did you rely on the main office at Peak a lot for that to kind of help direct you?
Into what?
On what the next steps would be. on something? Because I know there's several people at the main office that will reach out to me anytime I can, did you rely on that a lot?
Not really. I was
Okay.
always like, and sometimes you reach out and like, maybe you hear back, maybe you don't for a day or two, but I've never been the type that sits around and like waits. Like if I don't hear back, I'm just going to go find the answer myself or go find somebody that can give me the answer, and so that's kind of how I've always been, but also just knowing, and also if you're part of the MFM, the beauty part is you got a network of 3,000 people that can add value to you. Any question you have anytime, there are going to be hundreds of people willing to add value, give value, and drop some knowledge bombs for you. So just know you're not alone, man. Like there are people that are struggling, that have struggled, that got past, that can help you through it.
That's what I like about the peak. Kenny, go with your question.
So earlier you were talking about how when you got into that first deal with Tyler, how you already had investors and you were able to put in that $2.5 million off the bat. How did you raise the money when you didn't have a deal that they were raising it for?
Yeah, so I just raised it on the premise and the idea of a deal. I would share previous pitch decks and investor decks and say, hey, these are the types of deals that we're doing. We're targeting deals just like this between, 18 and 22%. We don't have any availability and any offerings right now, but once we actually have one that fits our criteria, we'll share it with you. And then I just put together an Excel spreadsheet. Hey, there's the All In book. Awesome. Yeah, I'm a co-author in that book.
I've got that. Reading it now.
Yeah, mine has if you look.
Yeah, I'm glad someone posted that. I wanted to mention earlier because Sergio had mentioned All In a couple of times, and boom, there we go, All In. So
mine has a better cover though.
Nice. We need to cop that, guys. Is there a link to that book that we can possibly purchase it, Eric? Or
yeah, there is actually. Hold on. If you guys give me 2 seconds.
2 seconds it is. I want to buy it.
Yeah, I've been reading it. I purchased it at Peak and I've been reading it.
Oh, how did I miss it? God.
It was at the merch table with all the where you bought all the merch shirts and everything like that. Yeah. There was water bottles and the books were there. So yeah.
So Sergio was out talking to people, man. He wasn't buying merch.
Hey, we're there to network and
Absolutely.
meet new people.
Absolutely. So I'm sorry, I don't know if we gave Eric, I'm not sure if you were able to answer the last question or not.
I think that'll work.
There you go. Good old Amazon.
But yeah, so so I was more so raising for the premise of the deal and let people know when I had one that fit this criteria, then I would reach out. But then the key there, and this is what so many people do not do, and I hope you do it, is get some sort of soft commitment, figure out what people can, that way you're going to be more valuable to the team. Like you don't have to commit to anything. You can tell them that, hey, don't worry, you're not committing to anything. But when we do, we're looking for serious investors that we can partner with because we only bring in a select group of investors to tag team these deals and partner with on them. And so, when we do, we want to make sure that they're serious. So when we do have an offering that fits this criteria, how much are you guys looking to bring in and partner with us on for the deal? Usually, and I always kind of guide the conversation. This is what I do. I always guide it a little bit. I'll tell them, yeah, our minimum, and you guys feel free to take this, but I say our minimums are always $100,000. Most, and this is the truth too. Most of my investors come in between 200,000 and 500,000, which is true. We have about 30 to 40% of our investors come in at the minimum, but most actually come in between 200 and 500 now. And so I tell people that, and the reason why I do is because I want people to come in with more. And, I wouldn't be pursuing the deal if I didn't believe in it. And I think, I feel like it's what's best for them to diversify their funds and get some tax protection and, benefit from the passive income. So yeah, I think that's what you do is, and then get some sort of soft commit and, figure out what they can come in with.
That's great advice. Thank you very much.
Yes, thank you.
Because then you can go to an operator too. You could go to someone like me or Sergio, Shane, Ryan, you can go to these guys and be like, hey, I'm looking at my spreadsheet here and I've got $1.2 million of soft commits. Most of them are accredited. I got to check on a couple, but, do you guys have any deals in the works? We're happy to come in and add some value. And, if so, maybe you're open to tossing a little bit of GP % our way for bringing that much. I think a lot of good operators would be open to it.
And you're correct. We do that just to help, just like just what you said earlier, you were saying a lot of the mores of like, hey, if you want to come in, we'll help you out and we'll guide you and take you under our wing. I love that you said that, Eric, because that just shows me that you're an amazing operator and that you're a hell of a guy. For one, there's a lot of sharks out there, and you got to be careful, guys. You got to be careful who you invest with. You got to be careful who you partner up with. Like you said, it's it ain't a day. It's a little, what we like to say is a 5-year marriage, 3 to 5 year marriage. And man, Eric's an amazing dude. That's a guy that I would love to partner up with. Like, why not? It just shows that he's got a lot of morals. And
we already did.
Oh, we already did, but many more. Let's get many more to come. And man, I love it. I love it. Let's get another question going. Davide from Miami, Florida.
Hello, guys. Can you hear me?
What's up, man?
How you doing, Eric? Thank you so much for sharing your knowledge. I love it. And thank you, Jonathan and Sergio, for putting this together. I'm part of the team with them, and it's always amazing. I'm learning the game, and I have my construction company down here in Miami. And the question is, I'm in sales, so I try to make the deal, So most of the time you say you're receiving a lot of deals from the broker, they don't make sense. Are you still pursue those deals with doing counter offer to them, or you let them go and you go to the
let me see if I'm understanding the question. So are you wondering if we are getting the broker sending us, or if we're going and finding deals? Is that the question? Or
no, basically the broker is send you a deal. You underwrite it, but it doesn't make sense. But it makes sense in a certain number. Are you still send them back the offer to them and try to negotiate that deal in your term, or basically you let it go or you go to the next?
Honestly, like at the point that we're at, we have more deal flow than we can really handle right now, and so deal flow is the least of our worries, which is a good spot to be in. We're grateful for that. So we do a quick and dirty version of every underwriting on each deal, and if it doesn't hit our quick and dirty, we're moving on. Purely because we have enough to go. We're getting 8 to 10 new deals across our desk a week. We can barely keep up with it. And now that we can sponsor deals, we're having probably double that across our desk from students in our network. And so, which is awesome. It's awesome. But because of that, we actually get to pick from the cream of the crop. So we get to be more selective on the deals that are brought to us at this point. So yeah, I feel like it's less chasing and more like we're the ones that get to choose now, which is cool. But yes, like I would say if the deal makes sense and you're close, the numbers, like say it hits your quick and dirty analysis, then you do a deep dive, underwrite that thing. And if it's close, then you can move some numbers around. Maybe it doesn't quite make sense. You just go tell the broker that, give them the feedback. Hey, it doesn't quite fit our model. It doesn't quite give us what we need to be able to project for our investors. And then he might give you some guidance. And if you're confident in your answer, then, a lot of the times they'll come back and say, hey, well, what do you think you can do? And, he'll say, go throw an LOI on what you can, and I'll kind of go to bat for you. It's all a relationship game.
Okay. And even if the number are very spread out and you still send like an LOI with the number that for you makes sense, would you do that or not?
If it's super far off, probably not. But you can always ask for guidance from the broker on it. Just say, hey, this is what makes sense. We don't want to offend the seller here, but we can't get any higher on it. So if you think it makes sense, we'll submit it. If not, and see if if you have a good relationship with them, he'll tell you, sometimes, kind of the guidance of what it will take to be competitive on that deal. And, if you're not going to be competitive, I wouldn't even waste your time putting together the LOI.
Okay. Appreciate it. Awesome. Thank you so much.
Great question there, David. And my goodness, we've been going for 2 hours now.
2 hours.
Eric, thank you. There's been so much value poured into the team that we've assembled here today. And man, I'm not sure, Sergio, where the recording might be, but there's so much value here that it's got to be shared with the team to rewatch it or share it. And
yeah, so this John, if you want to hop in too and explain, this is actually gonna we used to do these recordings on Sunday, just me and Jonathan, and we'll upload a podcast But we were like, man, we're getting all this value. And we did like 2 or 3 recordings with property managers and other, other investors. But we're like, man, why not just do this publicly where everybody will learn, not just us. So we decided to put these recordings, not only you guys are here live, but we're actually going to put the audio on Spotify on our podcast show. We're also going to put this recording on YouTube. And where else, John? What am I missing?
Yeah, I'll make sure that, I got most of you guys emails. So I'm going to be send you an email with the recordings for you guys to have it there. And then you guys can check it out in the car or whenever you have time, because I'm going to listen it again. All the stuff you mentioned today, Eric, it was bomb, man. You killed it. So appreciate your time,
Yeah, I just want to thank you guys all. I just typed it in the chat, but thank you guys all for the incredible interaction, all the support, the love, the thumbs up, the fires, the sunshines, whatever you guys put, like seriously made me feel so welcome. And I told you guys at the beginning, if I can just, impact, you guys and help you guys take, whatever step you need to in your businesses, then I'll get the fulfillment I need. And I just had fun with you guys. It was a blast. Thanks for all the great questions, for real.
And thank you once again, man. And hey, none of this would have been possible without Shane and Ryan. So guys, I know, I was getting a lot of love. Jonathan was getting a lot of love, Tony and all that, but none of this would have not been possible without Shane or Ryan, who, who reached out to Eric and made this happen. So, we got to give credit where it's due. Let's give a hand to Shane and Ryan Rutledge, because none of this would have been possible. We wouldn't have had this great meet 2 hours by now. But yeah, guys, Shane, Ryan, thank you guys. You guys killed it. Y'all brought Eric, and man, it was a great turnout. So we will be doing these every Tuesday. We'll have speakers every Tuesday, guys, and we're going to keep trucking to try to bring as much value as possible. And I learned a lot today from Eric, and hopefully we can close another deal. And
hey,
not only
me
and you, but a lot of people in this group that are in here listening also.
Yeah, let's put one together, man. It'd be really cool if we put one together and we get, what do we got on here still? We got 52 people, man. At one point we had 60
people, still 2 hours. That's crazy, man. You killed it.
We had in the 60s and we still got 52. Like the retention on that, the stickiness of this group here, man, I'm impressed to the bone. Like I would love to see us source a deal. We can sponsor it, and then let's bring in a chunk of these people, raise some capital, help out with asset management, whatever it might be, but let's do more together, man. I keep saying it, but like I said, we have more deal flow than we can handle. Like I would rather not say no to these deals and bring in other people to help us tackle these deals and do more together.
Y'all heard them, guys. Y'all heard them.
That's
We're
awesome.
future partners. Let's get it, guys. Let's go close the deal.
Guys,
definitely the spirit of it all. Thank you guys, man. Y'all are amazing. Thank y'all, Eric, again, Sergio, all the questions tonight. Thank y'all very much. I got to give credit to Ryan, man. He's the one that coordinated with Eric, so it really comes down to him. Even though I did a lot of the talking tonight, he did most of the coordination. And man, amazing, guys. Thank y'all so much.
Awesome. Well, this concludes the Zoom meet, the meetup. Thank you guys so much. I hope you guys have a blessed night. Eric, once again, thank you so much for your personal day, your time. And we'll stay in touch, guys. Thank everybody. Thank you so much.
Thank you, guys.
Yeah,
thanks, guys.
Night.
Have a great night. Take it easy.
Thank you, everybody. Thank you.
Thank you guys so much.
Thank you, everybody.
Drop your social media if you want. What was that? Let me see your dance move, Shane. Let me see your dance move.
Man, you want to see
Shane? Let's go, Shane. Come on, man. Come on.
Janae's got him. I see her.
Oh, look at Ryan. He's got my moves, man.
Wow, what a great turnout, guys. What a great turnout, guys.
Go, man.
Tony, there we go.
Ah, there you go.
Awesome, guys. Thank you, guys, everybody.
All right, see everybody next week, guys. Make sure you don't miss it. Powerful speaking is coming, so you don't miss this. I'm gonna send the invitation to all of you, so make sure that you guys stay connected every Tuesday, 7 p.m. Central, 8 p.m. Eastern time.
Awesome, guys. Thank y'all. Y'all have a great night, man. Talk to y'all very soon.
Good night, everybody.
Have a good night.
Good night.
Have a good night, Carolyn. We'll see you soon.
Bye, everybody.
See you guys later.